So today I'm very fortunate to have a friend and a loan partner of mine, Don Snyder from Priority Home Loans. Don, thanks for joining us today.
Thanks for having me. It's good to be here.
The $10,000 question everyone's going to ask you, and you walk through the grocery store and people learn you're a lender. Where are rates?
What if I were to say rates are at an 8-year low?
Wow.
I mean, they're the lower than they've ever been since I've been in the industry. So it's pretty impressive, and that's coming from CNBC just a few hours ago.
Okay.
So the 30-year fixed rate is averaging, as of this morning, 3.23%.
Wow.
Which is unbelievable.
So can we talk to a little bit about, before we get into too much into the weeds of what we want to discuss today, can we discuss why are rates doing this?
So rates have been maintaining historic low levels, and we kind of expected them to go up a little bit this year. But with the whole coronavirus outbreak, what we're seeing is that because we operate on a global scale, our economy is so intertwined with the rest of the world, that the fears around the coronavirus outbreak and the economic damper that's putting on economic activity is actually causing interest rates to go down because investors are afraid of how long this is going to continue. And so I think what we're going to see is that the rates will continue to stay low or potentially even go lower than they are now as long as the Zika outbreak, as long as the coronavirus outbreak continues, or even perhaps a little bit longer.
So Don makes a really good point here, and I want to just point this out really quickly, is that because of the lower economic earnings around the globe, because of the dampened activity, whether people are flying around the globe or even going out to restaurants in a lot of parts of the world, we're starting to see the stock market take a massive hit, and that's only forcing people into more secure investments such as bonds. The higher bond prices go, the lower the rates go, and those directly impact the housing market in a positive way. Now, while we're very sensitive to those that are infected by this disease and the thousands of more that will be affected, we want to make sure that we're going to talk about a subject today that you can take advantage of. We don't see opportunities like this but more than once in a lifetime. So I want to make sure I reiterate that we're very sorry for those people that are sick in the world. And I don't want to be around anybody that's going to have this horrible virus either. And I know that the U.S. will, and the World Health Organization will eventually get some sort of a medication for it to make people better. What we want to discuss is how you can benefit from this personally. So Don, what does this mean for people?
Well, like you said, with all due respect to the folks throughout the world who are suffering from this virus, it does open up a significant opportunity for new home buyers and existing home buyers to save a tremendous amount of money. You've mentioned that there's a once-in-a-lifetime opportunity here, and even outside of a refinance, I think it's important to mention that if you're already buying a house and you have your rate locked in, that you need to talk to your loan officer about whether you can renegotiate that rate to reflect the current environment.
I think that's great advice. And if somebody is out there and they've been on the fence about buying a house, this seems to be like it makes all the difference in the world now, because that lower rate is going to make maybe a larger home or a home that was previously out of their price point more attainable now.
That's right. Absolutely. And so, when it comes to refinancing, I ran some numbers today, and if we were looking at a house that was purchased for, say, $300,000 just 2 years ago, if that person was at a 4.125 interest rate, then, if they were well qualified, they could potentially be refinancing to 3.5% or even 3% and save, between $275 and $330 every single month. And of course, over the course of their loan, the time that they own that house, that adds up very quickly. So
it's an important message for people, is that you don't have to necessarily be buying a house today in order to take advantage of these rates. But what if someone's never, if I sold a client a house 3 years or 2 years ago, 3 years ago is even better, but how do they go about refinancing a home? What do they have to have as far as information for you to be able to get that done quickly?
For information, it's very similar to purchasing a home in that we're going to verify your income, your assets, and your liabilities. And so, what we're looking for is basically 2 years of tax returns and W-2s, 2 months of bank statements, 30 days of pay stubs, and your most recent mortgage statement. It's that simple.
So does their house value have to go up in order to refinance it?
Not necessarily.
Okay.
There's a lot of different situations. I would say there's as many different scenarios as there are homeowners out there. And it's important, if you're curious about it and think you might be able to save money this way, just to talk to a loan officer about it. Some of the big things to keep in mind, though, is has your home gained equity? Has it gone up in value in the time that you've owned it? Has your credit score changed?
Okay.
Because if your credit score has increased from owning a home, that alone may be enough to help you save money in a refinance.
And so that happens with a lot of borrowers anyway, right? As long as you're making your on-time payments, you haven't had any disasters in the middle of the last 2 years, you're probably in better shape than you were originally.
It's very common.
Okay.
Yes. And then the other thing to consider is, can you drop your mortgage insurance? Because for a lot of people, if you bought your home in the Spokane market 2 or 3 years ago, you may have enough equity in that home that just simply by refinancing and having it reappraised, you can drop those mortgage insurance payments, which could be up to a couple or a few $100s per month.
So is there a fee that gets charged for refinancing a home? How does that work? And is that something we can actually finance into a newer mortgage?
Well, it's important to remember that when refinancing, there are still going to be fees.
Okay.
Even though you don't see them, they exist.
Right.
And that impacts your savings over time. So there's going to be lender fees, title fees, recording with the county, a lot of the same things that we would see in a purchase.
Okay.
But this can be rolled into the loan. So basically taken out of the equity that you have in your house so that you're not putting more money in, but still able to save a lot in the long run.
It seems like there's a lot of different reasons out there to at least talk to a professional like yourself to see what the opportunities are. I mean, I know that there's some people even out there that have done some certain types of loan programs. If they can drop that M&I and if they can maybe pay back the bond loan or something like that because the house has gone up so much in value that it just seems to make a ton of difference in this world. So just because the stock market's getting pounded these days and rates are going down, don't just sit back and watch it. We're in a very, very fluent market right now. We're in an election year. I don't see rates going up anytime soon. As we're going to be dealing with this virus for a while. And so let's get out there and call me. I'd be happy to put you in touch with Don. Call Don directly. His information will be below, and see what we can do to help you.
It's all about starting to put together a plan and see whether it's going to work.
The other message I want to get out there is that when times are good and when the market's hot, people get busy. You need to find a lender that's going to return your phone calls. There's a lot of big banks right now, perhaps maybe even some small banks that are overloaded with refinancing questions right now. If you're not getting through to someone and you need to get this done, call me. We'll put you in touch with Don. We'll put you in touch with somebody that really cares and they'll take good care of you. These numbers that people run aren't magical, but the relationships can be. So you need to find someone you can trust and that can take good care of you in the required period of time. Don, thanks again for coming. I appreciate you giving us your insight, and I hope you can continue to help clients out.
Well, thanks for having me. It's always a pleasure. I'm Don Snyder with Priority Home Lending. If you have any questions about a purchase or a refinance or just creating a plan to get yourself into a home, give me a call. You'll find my contact information below.
And I'm Tim Olsen. I'm a real estate agent with John L. Scott.